Picture this. You get a candle, textbook, clean. Everything you ever told to look for is right there on the screen. And it's sitting in the middle of absolutely nowhere. That's not a setup. That's a good looking mistake. And it'll take your money faster than the ugly one. Because an ugly one, you just skip it. A perfect trigger in a terrible location is a terrible trade. Today, we fix that. Let's make this trading thing too easy. So last video, we named everything on the chart. 3 layers: trend, location, and risk. You can point to any element and say what it is now. Today, one of those gets promoted. We're not asking what is that anymore. We're asking, does it matter right now? And the first thing that ever matters is location. Now, why first? Everybody says location first. Almost nobody says why. Here's why. Location is the only part of the read that's true before anything happens. Think about it. A trigger has to fire. A confirmation has to print. A candle has to close. Every other piece of this needs price to do something before it exists. Location doesn't. Location is already there. It was there yesterday. It's there right now while the market is closed as well. And that means something bigger than it sounds. Location is the only decision you get to make calm. You can mark your zones on a Sunday afternoon, moving nothing. No money on the line, no candle screaming at you, just you, the chart, and a clear head. Everything after this happens fast. Triggers fires fast, confirmations print, and they're gone. You will not be calm for those. So you draw the map when it's quiet, so you don't have to decide when it's loud. That's not a beginner step. That's the whole reason it works. All right, so what actually counts as a location? You already know these names from last video. Now we use them. Supply and demand zones, where price reacted before, sellers show up and buyers show up. Order blocks, the last opposing candle before a real move took off. Fair value gaps, unfinished business. Price moves so fast it skips something. Equal highs and equal lows, where stops pile up and everyone's stop is somebody's target. Previous day high and previous day lows. Previous week high and previous week lows. Those levels matter because everybody can see them. Historical support and resistance. The prices that just keep mattering year after year. And where price meets the cloud or interacts with the WTMA, the trend layer touching the location layer. Now here's the thing I want you to catch. That's 7 different names, but they're not 7 different ideas. Every single one of them is saying the exact same sentence. Someone cared about this price before. That's all a location is. A price where something already happened, where a business got done, where somebody got trapped, or somebody got paid, or somebody left the order sitting. Learn to hear it in that way, and the whole list gets a lot smaller. Now, every location isn't worth the same. And this is where people get it half right. They learn to spot a zone, they spot a zone, and they treat every zone like it's the same zone. It is definitely not. Here's the hierarchy, and it's simpler than you think. Confluence. One thing at a price is a location. 3 things at the same price is a place. So when you got a higher time frame demand zone and an untested level sitting in the same spot, the structure agreeing with both of them, that's not 3 signals. That's one location. That's one location that's loud versus one little intraday zone with nothing behind it, nothing above it, nothing agreeing with it. That's just a location that's whispering. You're not looking for a zone. You're looking for a zone that agrees with itself. One more piece here. Premium and discount. Where are you inside the range? Because buying at the top of a range and buying at the bottom of a range are two completely different trades. Same trigger, same candle, completely different odds. If you're buying up in premium, you're paying retail. If you're buying down in discount, you're closer to where the value is. That's not a rule about what to do. That's a question you're supposed to ask yourself before you get excited. All right, let me show you the most dangerous spot on the entire chart. It's not a bad zone, it's a no zone. The middle, mid-range, no man's land. Price sitting halfway between everything, not near supply, nor near demand, not near anything anybody cares about. And here's why it's dangerous. It doesn't look dangerous, it looks calm. It looks tradable as well. Candles are still printing. Your indicators are still doing indicator things. But there's nothing above you to reject from, nothing below you to hold. And most important, there is no invalidation you can actually define. Think about what that means. If you can't say where you're wrong, you can't be wrong cheaply. You just sit there getting chopped in both directions until you're tired and you quit. That's what the mid-range does. It doesn't take your account in one move. It takes it in 40 small moves. The middle of the range is where accounts go to die. It's because it drops, it's because it goes nowhere, both directions, until you're tired. So here's the rule. And it's the shortest one in the whole series. No location, no trade idea, period. If you can't name what price is, you don't have a trade idea. You've got a feeling with the chart open. If it isn't a setup, it's a setup to lose. 3 things to lock in. 1, location is the only part of the read that's true before anything ever happens, but which makes it the only decision you make while calm. 2, confluence is the hierarchy. 1 thing is a location. 3 things is a place. And 3, no location, no trade idea. The middle of the range isn't patience, it's exposure. Now, here's your practice question. And notice I'm still not asking you to trade anything. Pull up any chart. Don't ask, would I take this? We're not there yet. Just ask, is price at a location right now, or is it in the middle of nowhere? And be honest, because most of the time, the honest answer is the middle. That's normal. That's most of the day. Getting comfortable saying nothing's here is a skill. And it's one of the most profitable ones you'll ever build. Your assignment, mark 3 locations on a chart. For each one, write down what type it is and what else agrees with it at that same price. Then mark 1 spot that is not a location and say why not. Post it in the Discord. The link will be in the description. Still no trade ideas. Last time I'm going to say that because next video, stage 1 is done. And stage 2 opens with module 4, the liquidity event. That's where price finally does something. Confirmation over prediction. Stay stacked.
Over prediction.
I don't guess I'll wait.
I confirm.
Structure first.
Don't rush your rules.
Keep discipline. Stay stacked up.